All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is 9 a.m. Eastern Standard Time, Friday, March 3rd. March 4th is tomorrow. March 3rd, 2023. Thanks so much for taking the time out of your day to join me this morning and every morning on the YouTube channel. Ready to rock. Thank God it's Friday. Let's make it a great rest of the day. Dow futures up 141 points, NASDAQ up 86, S&P 500 futures up 0.61% at the high of the session. Russell 2000 futures at 1915. Happy Friday, William. Thanks for joining in. Crude oil futures are down 2.8%, 75.97. Gasoline futures $2.62 a gallon, down 2.78%. 10-year Treasury yields below 4%, 3.983. The dollar is down 0.35%. That should help equities as well, 104.66. Keep in mind the market was up yesterday and yields and the dollar were up. The VIX is below 20 at 1936 this morning. Gold futures are up 0.70%, 1853 an ounce. Thank you, dollar. Silver futures 21.19, up 1.41%. Copper futures above 410 now, 410, up 0.58%. Euro dollars up 25 pips, 106.22, 135.86 for the dollar yen. That's down 89 pips. Remember that correlation, the yen and yields. When the yen, dollar yen goes down, yields are down. Usually 120.05, 58 pips. For the pound dollar to the upside, 22,445 for Bitcoin. I don't know if you checked that last night. Bitcoin fell as much as 5.3% or so overnight, and then it bounced back a little bit. I don't have much details on why crypto fell. I want to say what I've been reading was that Silvergate, I guess, is a crypto brokers of some kind. They fell. So again, kind of the kind of worriness of systemic risk, kind of the FTX, Binance sort of thing. 1577. For Ethereum futures, that's down 4.6%. Good morning, everybody. Any tickers do you have on this Friday? Zoom Balloon's asking. Zoom Balloon is ready to go. SPY levels to the upside. I got you. Let's go ahead and go over the chart. Let's do S&P 500 futures. You know, Carlos never talks about S&P 500 futures, right? Okay, so let's go ahead and take a gander. Let's zoom in a little bit here. We bounced off that 200-day moving average. Check. We tagged the 100-day moving average, check. We're above the 50-day moving average, check. We're looking for 40-30. That's our trend line back to the upside. If we get above there, I'm taking a look here at this 20-day around 406.21. 40.66, excuse me. So again, just like yesterday, we talked about the market was going to go higher. We were going to bounce off that 200-day. We played some calls yesterday. We played Google or Alphabet calls, so well done, team. Right now, we're trading at 400 on SPY. There is a gap to fill on SPY. Let's go and take a look at it on the hourly. Right here at 407.15. So take a look, Zoom Balloon. If we get above 402.01, or let's call it 402, I'm taking a look at the 407s to possibly the 408s for next week. I'd want to get those before Friday. Friday is non-farm payroll report. If we have a hot jobs number like we did last month, I expect markets to pull back, maybe retest that trend line again. We may just be bouncing for a little bit. So in order for us to really get excited about, really some upside momentum in stocks, you need to fill those gaps first. So again, once we get above 408.05 or so, then we can get a little excited again. But as of right now, we're just playing the levels and just trading. It is not the best investment environment, I can tell you that, unless your dollar cost averaging. Right now, it is a trader's market, very similar to 2020 March. As I remember, we had our videos and we were trading and everything like that, talking to everybody on the morning note. And at that time, it wasn't an investable market either, still kind of choppy. But the trading opportunities were there if you were there with us in March and April and May. There was some great trading opportunities. Put options, obviously, we traded a lot. God, I remember we traded 8 to 10 times in one day IWM puts on a crazy day in February 2020. So I actually spoke to Investment Club yesterday on the chat, and it was very quiet, and I kind of felt bad. I apologized to them. There's just not a lot of action, at least in the investment side. It just really isn't. Right now, it's a pure tech traders market. Option traders rejoice. Futures traders rejoice. Futures, not so much. Options have been the best. And that's what I've been really focusing on with the team is, if there's not anything to really invest in right now, we're going to do our best to go ahead and trade this market and see if we can make some returns for you guys while we stay patient and look for the break of 4,200 to the upside, because that's what I'm waiting for on S&P. So in terms of levels, we're going to wait for 402. And then if we're at 402 breaks, I'm taking a look at the 407, 408 level. You can see that gap fill here on the 1 hour. And then we have another gap here on the daily around 408. So 407 to 408 would be my target. If we get above 402, that's about a $5 to $6 move to the upside. Let's go and take a look at QQQ this morning. QQ this morning, 296.80. That's the level I'm looking for, and there's another gap to fill here at 303. That'd be probably the target. If we break above 297, we'll call it. Maybe the 302s or 303 calls would be in play for next week. Again, I'd want to close before Friday on that NFP day. Let's see. Yep, here you go. Yeah, young Danny's already ahead of me. I already was talking about QQQ. So again, breaking 296.80. I'm taking a look at those 302 to 303 level calls. We'll see about the volume and everything. When do you think Bitcoin will break above 25K? Simple answer is when the dollar falls. If the dollar does break down below 102 or around 103, then I would expect Bitcoin to rise. But again, a lot of it is on the dollar. So we need that dollar index to come back down. Since Bitcoin is priced into dollars, we'd expect Bitcoin to go higher. So that's really what we're looking for, is the dollar to come down a little bit more to get Bitcoin to 25K. Never mind, you answered it perfectly. Thank you. There you go. That's service, answering the questions before you even ask them. That's what I'm talking about. Do you ever look at the imbalance? If so, would you consider huge size for either buy or sell order? I think you're asking about like order flows. And again, that could be hedging, that could be put writing, that could be call writing, that could be anything. So I try not to look at, I guess like flow algo or was it cheddar flow? I don't really use them. Sometimes I see them on Twitter. Sometimes they do validate my analysis, which is always nice, right? Confirmation bias, everyone likes that. But I don't use them personally. No, the price action charts is what I use. Flows, of course, and you always have imbalances at the end of the day. This many to buy, this many to sell. I don't really concern myself with that. I really just focus on the price action, the moving averages, and the technicals, and see if the fundamentals line up to it when I make a trade. Because I can't really look at macroeconomics in a big picture when I'm trying to trade weekly options either. So again, you kind of have to have a little bit of a balance. But no, I don't use any kind of flow software or take a look at imbalances at all. I really just trade with my eyes. The best indicators are right here on your head, your eyes. So again, in terms of this morning, we did take Alphabet yesterday, Google puts. We did open some calls. I opened some Caterpillar calls for next week. We are flat on those currently. So again, really just the waiting game here. In terms of expectation today, as everyone loves predictions, I expect us to get to around 40.30. We may just reject it, but in terms of the market I'm looking to around 40.20. Again, 10 more handles from where we are now. If we can close above 40.30, that would be amazing. That'd be a really good win for the bulls as we start getting to, again, the seasonal period of bullishness in March. So again, let's get back above this trend line. Let's see if we can tap this 20-day moving average. We know that momentum indicator. And if we break out above it, then we'll play some calls. And if we reject below and maybe tap below the 200-day, which I don't expect, then we'll possibly play some puts. But again, the skews to the upside, there's so many people who bought puts. Put to call ratios are elevated. So again, we've had this discussion back in October when we had put to call ratios being so high, right around the 14th. And if you look at it right here, here's where the 14th, the 14th was right here. We were at 35.90. We are now at 4,009. Again, there were some ups and downs as we went. Obviously, it's not a straight shot like I've been saying, but again, I do expect higher this year, and we're going to go ahead and ride that. So there we go for the market for today. Not a lot to talk about. We're just going to watch. We'll see if we get one more trade for the week is done. So far this week, it's been a 2-for-2 week. I'll go over the week itself and go over next week's economic data with you guys on the recap at 4:10 or so when I start finishing up for the day and sending out the recaps to the team. So we'll go ahead and recap that with you right after the bell. We'll also do the podcast after the bell as well. That should be around 5 or 5:30 will be sent. If you're interested in listening to the podcast, it is free on Spotify, Apple Music, and the Anchor app. That is the GAR Capital podcast. Feel free to subscribe. On the S&P, if the 100 MA crosses above the 200 MA, is that a significant bullish sign? That is a pretty bullish sign. I don't say significant. The golden cross is the 50 because it's more of a shorter time frame. But if you start getting the 100 above the 200, oh yeah, you're starting to see momentum to the upside. That's a really good sign. But we'll go ahead and see what we get. Again, you know me. I already have my bullish bias. I've already said the lows are in for October. 3502 is low on S&P futures. I don't think we may at worst get to 3,800. I don't think we do. I think 3,900 may be the worst we get in terms of the market. And again, I want to go ahead and bring this up, which is interesting. Take a look at this chart here. This is from Twitter. Not tons of headlines either, so I really didn't want to go over tons. But again, if you're interested in reading some headlines, feel free to join us on Twitter. Twitter is free for everybody at GAR Capital. So here is the chart I'm looking for. Where is it? Let's see. Something about March, the seasonality of March. That's what I was looking for. Here we go. Over the past 10 years, the S&P 500 has bottomed for the year on March 13th. Thank you to 2003, 2009, and 2020 for this one. So again, you can see the past 2 decades, stocks tend to bottom back in March. So we're now in March. Let's see if we get that continuation. Again, this is all seasonality. This is all history. So we know the saying, you know, historical events do not predict future outcomes, sure. But again, that's what we have to go by. And we'll see if we follow that analog as always. And we'll go and leave it there, guys. I hope you guys have a great trading day today. I will catch you guys later on today for the market recap. I haven't done a newsletter since I've been doing these videos. So I'll do the video this week. Next week, I may just do a newsletter. If you guys prefer the newsletter or you guys prefer the actual video, feel free to type in the comments what you prefer. There's some that like to read what I write and some people like to watch me talk. Whatever you guys prefer, just let me know. Why is there heavy volume on certain strike prices or or puts that are very far in advance sometimes next year? That could be directional plays where they're thinking that's where we're going to go. That could be hedging of positions that they have. It could be many factors. Some funds like to go far out with their contracts. People like me like to just day trade it. You know, there's an ass for every seat. Can't really tell you why, but again, it happens more frequently than you know. Have a great weekend. Thank you so much, Zoom Balloon. And we'll go and actually, I think, no, that was it. That's all for the day. We'll go ahead and catch you guys later this afternoon. We'll go over everything. We'll go over the news and the events of the day. We'll talk some price action. We'll talk some predictions. We'll talk about the economic data upcoming next week. Should be a good one. And let's just keep it moving, guys. Have a great rest of your morning. I will see you guys later this afternoon. Happy birthday to my lovely wife. I love you very much. And happy birthday to Kevin Garcia, one of our VPs here at GAR Capital. Tomorrow will be Nick's birthday. You know him as Nick B on Twitter. And I wish him happy birthday as well. Thank you guys for all you do. We will see you guys later on today. Have a great rest of your day. Cheers.